You are listening to chartingwealth.com for Wednesday, the 3rd of February, 2016. Well, the markets were down today. The overall market IYY was down 1.93, almost 2%. As we open our charts and start looking at what's going on, we see that we did not have a crossover. It looked like it might cross over yesterday when the markets opened on Tuesday or sometime during the course of the day. That did not happen. We do have up candles and some up movement on our 2-day chart, but no crossover with the down movement today. When I say today, I mean Tuesday as we get ready to go into Wednesday when you'll be using this broadcast. What do we see happening intraday? Well, over the prior day, and again, this is a 2-day candle we originally look at, there was a great deal of up movement. And over the course of Tuesday, there was a great deal of down movement, both in the morning and in the afternoon. We have been talking about a dead cat bounce. We saw the market moving up on the 21st of January, and it moved up for many days. And is it topping out now? It's not crossed over going down yet. We're going to wait and see if that happens. My friends, if that does happen, this is when you look at getting into your down move. Now, remember, we've talked about this potential dead cat bounce where the market, after a lot of down movement that happened at the beginning of the year, all of a sudden the market recovers for a little while and then rolls back over again. We are still in a confirmed down move on our big chart, and if indeed our small chart matches that down movement with a crossover going down, that is the trigger for us to look at getting into a virtual trade on an inverse fund on a down move. Now again, we're not making a call for you to spend your own money on this. We're not a stock calling service. We're an education firm. We want you to practice until you get good enough that you start making your own calls. Now, let's go next to SPY, the Standard & Poor 500. IYY, of course, is the total market. That's what we looked at first. Now we're looking at the big 500 companies that make up a good bit of the volume of the market. It didn't cross over yesterday either. That is on Monday, and what happened on Tuesday? We did not see it happen then either. Tuesday actually was a down day. All the gains that were made on the 2-day candle in its first day of the 2 days on Monday were, not all of it, but a good bit were lost on Tuesday. And in fact, SPY was down 1.8%. Now, we see the derivative oscillators continued to lose downward momentum, but there's been no crossover. And if we jump back to our 4-hour chart, what do we see? Looks somewhat similar to what we saw in the total market, with lots of down move both in the morning and the afternoon on Tuesday the 2nd. So again, no crossover yet, but if that does occur, then it would be a trigger for a potential inverse move on the Standard & Poor 500. Remember, there are funds that move inverse. SPY goes up. There are other funds that when the, what am I saying? it moves with the market. The inverse funds, and the best example I can give is with the Qs, is QID. It's a double inverse, and there's also total market and S&P 500 funds. But as we jump into the Qs, which I did a little prematurely there, we'll look at the 2-day chart. What do we see? It didn't cross over, just like we saw on the other two indexes. And actually the Qs was down 2.16% for today. So that was their biggest down move. And what do we see happening on Tuesday intraday? Some movement in the morning, lots of down movement in the Qs, which is the NASDAQ 100, the tech stocks. It's not crossed over yet going down, but if that happens again, something like QID might be an idea you might have for making a trade in an inverse fund to see how that works for you. Okay, that is where we are as far as our indexes go. Lastly, we're going to go to gold. What is going on with gold? Well, gold has been moving up on the 2-day chart since the 14th of December. It slid sideways for a while, up around the 7th through the 11th of January, sideways to the 19th, and then on the 21st started moving up. Gold is still in a confirmed up move on the 2-day chart. If we revert back to the 4-hour chart, what do we see? We see gold over the last few days has really not gone above a high of somewhere around 108. Has continued to slide sideways. And actually for the day, gold was up 0.04%, getting a little long in the tooth right now. But if the markets continue to move down, you may see gold continuing its up moves, but is still in a confirmed up move on the 4-hour chart, which is starting to work for us again since the 20th of January. That is where the markets ended the day on Tuesday as we go into Wednesday, the 3rd of February. Hope that this review has been helpful for you. Please feel free to go to our website, chartingwealth.com, review all the information we have there. If you need any other information, please always ask for it. We're happy to produce videos, to produce training, to do what we can do to help you. And we'd appreciate you following us on Facebook, Twitter, and of course, sign up and get our daily review, which is available just by putting your email address into the site. We'll also send you free of charge how to read a stock chart video, a link to that, and our charting layout from freestockcharts.com, which is what you see us cover on our videos. Those of you listening on audio, be great for you to go to iTunes and sign up, subscribe to us, and also give us a 5-star rating and say something nice about us. Thank you so much. God bless you and your trading and your learning from chartingwealth.com.